look at the flashes at the bottom of your screen. This is the big announcement by the government. The government has imposed a moratorium on Yes Bank, which essentially means that depositors cannot withdraw more than 50,000 rupees with effect from today for a period of 1 month. Essentially, what the government is trying to do is to ensure that there is a smooth process that can happen with respect to this buyout that SBI is planning. This is the big story that we are following here on ET Now as well. Let me see if I'm joined by my colleague Varun as well on the phone line. But this is the big story that we have for you on ET Now, that the government has put curbs on withdrawal of Yes Bank till the 3rd of April. This is being done on the request of the central bank, the RBI. The depositors cannot withdraw more than 50,000 rupees from Yes Bank with effect from today. This is, of course, the big story coming in light of the developments that we saw here on ET Now in the morning as well. The government has put this moratorium for a period of 1 month till the 3rd of April from today onwards on request of the RBI. And what they're essentially saying is that if you're a depositor of if you have an account in Yes Bank and you want to deposit, if you want to withdraw money, then over 50,000 rupees you cannot withdraw. What does it mean? How is it going to impact the lives of depositors as well? I will be joined by my colleague Maithili and Varun in just a while from now. But on your screens, you can see how caps have been put on withdrawals from Yes Bank as well. Yes Bank has been put under moratorium till the 3rd of April. This is coming in light of the developments that we saw in the morning. Remember, LIC as well as SBI is looking to pick up almost 49% stake in Yes Bank at a price of 2 rupees per share on a preferential allotment basis. There is, of course, an expectation that some sort of regulatory forbearance will also be given in this case. But this is the big story that we have for our viewers right now on ET Now, that there are curbs that have been put in place through the RBI, the central bank. They have put withdrawal caps on Yes Bank. Let's see if we can get some of those guests back on the channel. We were in conversation with Sailesh Haribhakti as well as Sandeep Parekh earlier on the show as well. They have imposed moratorium for a period of 1 month. This is the story that we have for you so far. Let me see if we're joined by Tamanna as well. She is getting mic'd up. Do we have Tamanna? If my producer... Okay, she's getting mic'd up. We will be hearing from Tamanna in just a while from now. But this is the big story that we have for our viewers here on ET Now, that the government has put restrictions on Yes Bank. These restrictions are for withdrawal of money. That means Yes Bank cannot pay over 50,000 rupees to the creditors without the approval of the RBI, the central bank. The idea is to not create panic for the people who have their money in Yes Bank. But what the government essentially is trying to do is to ensure that there is a smooth process that can take place when a smooth transition can take place when SBI and LIC together can pick up their 49% stake, as we've been telling our viewers since morning, in fact, in Yes Bank. This is coming in at a time when Yes Bank was had failed to get any investor on board. They've been trying for a very long time. Yes Bank, remember, also was looking to get investors ahead of that dreaded deadline of March 14th. But just before that, remember, the government as well as the RBI had decided that perhaps there is a need for intervention, which is why SBI will be jumping in, and which is why they've put a restriction. Withdrawals have now been limited to 50,000 rupees. In fact, a lot of experts had told us earlier on in the show that the idea is to protect the interest of depositors. The idea is to is in the interest of the larger financial safety, financial security of the financial markets as well. All right, Tamanna is also joining us on the broadcast. Tamanna, these The idea is, of course, not to create panic, but I'm sure the idea with which RBI is moving and the government is moving is to ensure that a smooth transition takes place if SBI and LIC were to pick up that 49% stake that we've been talking about.
Absolutely, Ruchi. It's the big story breaking this hour, of course, as we kick off the India development debate, but also to let you know that ET Now has been on top of the story right through the day with exclusive details that we broke on a possible rescue mission by SBI and LIC. But a number of questions that come to mind right now with this move, one of which was, why has the need been felt to restrict withdrawal at this point, especially when talks are in the works for a possible stake sale. Of course, if you've just joined in, this is the big news right now. The government has imposed a moratorium on Yes Bank, and withdrawals have been limited. They can't be more than 50,000 rupees withdrawn by depositors in the next 1 month. Now, the priority for the government will be to safeguard depositors. As far as shareholders are concerned, they would be at the absolute back burner. It also raises questions on what really has been going on in Yes Bank so far, because the story till some time ago was that they were trying to find a buyer, an investor, and everything was fine. But if we've come to a situation where there's a cap on withdrawals, then the question is, what really is the entire picture? J.N. Gupta is joining me now on the phone line, and we'll get some perspective from him. Mr. Gupta, this news just coming in that the government has put withdrawal caps on Yes Bank. Depositors cannot withdraw more than 50,000 rupees for the next 1 month, at least till April 3rd is this moratorium, and it's on the Reserve Bank of India's request. That's the detail that we have right now. How do you see the situation developing, and why would you think a need would have been felt for a moratorium at this stage?
I would say it's a pathetic situation, and pathetic because what is happening, that it is not a case that suddenly something has gone wrong with Yes Bank. If one would read research reports for long that have been coming, issues of Reserve Banks have been highlighted, or Yes Bank have been highlighted for last 2-3 years. This very clearly exposes the supervision ability or capability or systems of Reserve Bank, audit process of banks, and internal controls of the bank. And the problem is that if a bank like Yes Bank can be put in moratorium and it is threatening the entire banking system.
Mr. Gupta, the Reserve Bank of India has just, please hold on, because the Reserve Bank of India has just come out with a release. It says the financial position of Yes Bank has undergone a steady decline, largely due to inability of the bank to raise capital to address potential loan losses and resultant downgrades, triggering invocation of bond covenants by investors and withdrawal of deposits. The bank has also experienced serious governance issues and practices in the recent years, which have led to steady decline of the bank. In fact, Ruchi has more on this. The RBI's press release. Ruchi, what are the broad points of what they're saying?
Oh, well, this is not going to be good news coming in for Ravneet Gill and the entire management of Yes Bank, who up until now were trying very hard to get another, investor on board. We had heard about Arvind Singh Brech. We had heard about JC Flower and Tilden Park as well, Capital as well, who had been trying to park their money in Yes Bank. But looks like the RBI was not very happy with the way things were proceeding with Yes Bank, and which is why, Tamanna, as you have very correctly pointed out, that the RBI in their release have said that they were, they're not very happy with the financial position getting degraded in Yes Bank. There's a large decline in that. They are saying that the bank had experienced serious governance issues, governance issues and practices also being highlighted. RBI had been in constant engagement with the bank's management to find a way to strengthen their balance sheet and liquidity. The bank's management had indicated that to the RBI as well that they were in talks with various investors and they were likely to be successful. They had been talking to private equity firms and exploring opportunities, but these investors did hold discussions with the senior officials of RBI as well for various reasons, but eventually did not infuse any capital. So this is a clarification coming in from RBI as well, that these talks were happening for a very long time, but no money was finally brought to the table by all these investors who were also talking to the RBI as well as the management. Since a bank and market-led revival is a preferred option over regulatory restructuring, the Reserve Bank made all the efforts to facilitate such a process and gave adequate opportunity to the bank's management to draw a credible revival plan, which did not materialize. So the credible plan by the management, the current existing management of Yes Bank, did not materialize. In the meantime, the bank was facing a regular outflow of liquidity as well. Considering all these developments, the Reserve Bank of India today came to a conclusion that in absence of a credible revival plan and in public interest, it is important that a moratorium under Section 45 of the Banking Regulation Act of 1949 be put in place. Tamanna.
Yes. In fact, Ruchi, the Reserve Bank has put out one more release as well, where they have said that they will be superseding the entire board of directors. There will be supersession of the board of directors, appointment of administrators as well. So they go on to say that in exercise of the powers conferred under Section 36A CA of the Banking Regulation Act 1949, the Reserve Bank, in consultation with the central government, has superseded the board of directors of Yes Bank for a period of 30 days owing to serious deterioration in the financial position of the bank. This has been done quickly to restore depositors' confidence in the bank. I hope it does restore depositors' confidence. It's going to be putting in place a scheme for reconstruction of amalgamation. Shri Prashant Kumar, ex-DMD and CFO of State Bank of India, has been appointed as the administrator. That is the latest coming in. Prashant Kumar is the administrator at this point, appointed by the government of Yes Bank. We're going to have to see what are the circumstances that led to this situation right now. But a surprise move. I just want to go across quickly to Nayantara, who has been reporting all day about the SBI LIC move. Nayantara, important to look at your story in conjunction with what we've seen in the last 10-15 minutes or so, and I'll come back to her in more details on that. But I also have Kunj Bansal with me. Kunj, how do you see this unfolding? Kunj, can you hear me?
Yeah, I just missed the last part of your question.
How do you see the series of events unfolding, of course, tomorrow as well?
Yeah, so obviously throughout the day, the developments or the news were more of a speculation. And now, at least finally, we have some official communication. So that is one good part, that the rumors are over and we have actual news. So one, that. Two, that also from RBI. So that is the most authentic as it could be. Now, all these 2-3 measures which have taken RBI are indeed, were indeed required for the continuation of good confidence in the banking system in the current scenario. So, in fact, I'm just reading the RBI's one of the press releases. They have come out with 2-3, wherein it says that the bank was also engaged with a few private equity firms for exploring opportunities to infuse capital as per the filings to the stock exchanges dated February 12. These investors did hold discussions with senior officials of RBI, but for various reasons eventually did not infuse any capital. So what I'm seeing here is that one of the impressions that was there in the market is that probably RBI was not happy with some of the investors. Now, if I read this line, it doesn't give that indication. It said that they came for discussion with RBI. RBI hasn't mentioned whether RBI agreed or not, but RBI clearly says that they did not eventually infuse the capital. So one of the interpretations could be that RBI did not have a problem with them, but the investors probably did not find a bank worth investing for whatever reason. It could be the financials which they would have checked. So coming back, I think this step was long needed to stabilize the financial system, the confidence, and we have to now wait and watch what further actions are taken. But this is a standard procedure which RBI has adopted in a lot of cases in the past also. And I think it will for some time, although it's certainly not good news for the Yes Bank shareholders, But for the banking system as a whole, it's a good news.
It's also bringing to questions about what was happening all of this time. J.N. Gupta, you were mentioning before that what has come to pass. Do you think that it's good news at least that the RBI and the government have now stepped in?
See, it is a good news at least that it is going to stem the rot and insulate the entire banking sector from this problem. That is one aspect of it. But the bigger problem that what you are reading from the press release of RBI, it is a very well drafted press release which does not reveal anything that I have not done anything wrong. That means RBI has not failed in any manner. It has nothing. But answer my question when they say the governance issue. Now, did we not know the governance issue when the fight started between Madhu Kapoor and Rana Kapoor? We knew very well that there are governance issues in the bank. For 7 years, what was RBI doing? Now what has happened? Rana Kapoor has sold everything that he has and made money. Now, who is responsible? Who was the person who is responsible for this problem in the bank? It is Rana Kapoor and the board. Now, what problem is it that every time you have this problem, you say the person is no longer a shareholder or the board is independent director, not responsible. I don't agree with this. If you have taken a responsibility at a board position, you jolly well be responsible. But the issue is, this is not like a virus attack that suddenly yesterday a virus came and somebody died today. No, this issue has been going on for at least 5-6 years. Then what did the RBI supervision system, what did the audit, what did the board find out till now? Nothing. So the issue is that it is not a first case, it is not the last case unless until RBI tightens its shoes and really get it to, rather than getting into a procedural issue and all those nonsense 100 reports or 200 reports per week or per day. No, you get to identify what are the parameters for your supervision. We don't have anything. And that is why you look at what happened in the PNB, what happened in ILFS. Every time, I would say, if I have to blame one agency for the mess in the financial system, it is RBI.
The RBI that has now come in with more details of what exactly it saw over the last few months. It was engaged in a few private equity firms for exploring opportunities to infuse capital as per the filing in stock exchanges dated Feb 12, 2020. So these efforts have been on for some time. Was there a failure to stem the rot earlier? Because we've seen this whole, a situation play out with Yes Bank again and again, wanting to come in and say they're looking for investors. I have Hemindra Hazari on the phone line with me, banking analyst. Hemindra, Yes Bank under moratorium till April 3rd on RBI request cannot withdraw more than 50,000 rupees. A new administrator in charge for now. How do you see this panning out?
Obviously, this was heading for this. It was very clear because none of the equity investors were willing to put their funds. So obviously, they saw far more rot than what was publicly available. But having said that, I've been pointing this out since May 2017 consistently that there were some serious issues with, Yes Bank's balance sheet, which was not getting resolved. And therefore, even the board of Yes Bank needs to accept direct responsibility, and investigation should be made against the executive managers at Yes Bank. So it's a failure of the auditor, the board, the regulator, the business media, credit rating analysts, because even 5 to 6 years ago, everyone knew in the financial world that Yes Bank was doing high-risk lending, but nobody wanted to publicly point it out. So therefore, anyone who could dig a little and understand basic financial analysis could have uncovered this. And that's what I've been doing for the last 3 years regarding Yes Bank and a lot of other private sector banks, which the market keeps glorifying.
Bandyopadhyay also joining us. Tamal, Yes Bank, in the news for a list of fast-paced developments through the day. In the morning, we knew that there would be some intervention, SBI and LIC roped in possibly as a rescue effort. And by the evening, the board has been superseded. There is a withdrawal limit of 50,000 rupees for at least a month. What are we, not seeing on the surface of it? How deep possibly is the rot?
No, it's a big problem. This 50,000 rupees is for generally, but the bank can make an exception for medical purposes, for weddings, and for education purpose. So 50,000 is not blanket. So the one thing is depositors' money is safe. I don't think there's any issue on that part at all. And if you really require more than 50,000, just to avoid any kind of communication gap, let's not depositors get panicky. So that's the thing. Other part is this: say any decision you take in terms of change of management, SBI and LIC stepping in, which have been throughout the day. The news has been there. It can't be just done. So moratorium is a process. If you have seen in the past, in every case, including the last instance of a new private bank being taken over by another entity, is 2004 Global Trust Bank, which was taken over by Oriental Bank of Commerce. The process was the same. It was Oriental Bank of Commerce took over, but through a process of moratorium. But in this case, the moratorium is 1 month long. Unlike in the past where moratorium, like in case of Global Trust Bank, it was only, I think, over the weekend. So everything was in place and the moratorium was clamped down, and then it got, the merger got happened. So in this case, I guess, understanding is this: it is not going to be a merger, so it can't be done so swiftly. And then it would need a series of sort of relaxation from regulators, particularly SEBI in terms of pricing, so on and so forth. I think that's why the time span is larger for about a month. So it was coming, it was logical. And whenever you do such thing, it is done through the moratorium. As far as the private sector banks are concerned, under the Banking Act, Reserve Bank of India has the power to do this, which they do not have for public sector banks. So Yes Bank has been a black box where people have their apprehensions. And if you have seen the Yes Bank's list of investors in Yes Bank, hardly you would find any domestic investors. I'm talking about till recently. Any domestic. It's primarily the foreign investors who are not very sure about, who are not very probing what is going to happen. But domestic investors, because as Mr. Hazari, your other gentleman was talking about that, there are large-scale apprehensions that everything has not been right. I think Reserve Bank of India apprehended certain things, and it got into the act sometime in 2017. First, Mr. Kapoor was not allowed to continue, not given another term, and then it probed and found a lot of things. So Yes Bank had been a black box. Yes Bank had been trying to create a sort of it has been labeled as a lender of the last resort. You don't get money anywhere, so Yes Bank is there. So it was, in some sense, as I'm repeating, I have to, it was creating a junk credit market. Anybody who can't get credit anywhere else can knock at Mr. Kapoor's door and could get credit at a very high price, putting a very high processing fees on the table first, and giving very high interest rate. So in that process, if that entity can continue for a few years, Yes Bank had nothing much to lose. And it has always created a situation where when a particular loan turns bad, there is some taker, either some other bank or certain NBFCs. So there is a sort of, you call it nexus, you call it relationship, it had created. In that kind of architecture, it's a high-risk business. Reserve Bank of Yes Bank was continuing with this, and I believe there was no management. It was run by only one particular gentleman, and the board just watched it.
That, Tamal, what happened after that? You have Ravneet Gill over the last many months, and we had this conversation earlier today as well, assuring and assuaging concerns. So many, names popping up of probable investors. And then, you're saying this is process, but to a lot of people who are not, watching from the outside, it then comes as a shock, and you wonder what led to this situation.
No, that's Yes Bank has been a sort of iceberg. You did not know to what extent it's below the water. So the new management who took over, who was rather introduced by Reserve Bank of India into this bank, and a leader by Mr. Gill, who came from Deutsche Bank, I think he could never appreciate the enormity of the rot. So it just, you look at any bad asset in Indian corporate sector, in real estate, in elsewhere, and everything. Yes Bank is there, the exposure. Not only the non-banking finance companies, real estate, and everywhere. So I think he could not appreciate the rot. So he kept on hoping that people would come. People did come, I mean the investors, and they did recce, and then they just walked out. And the pricing was not suitable to them. So one way of addressing this, probably much before, maybe 6 months before or 8 months before, actually getting the investors a much lower price, which had happened globally. If you have seen that Citibank was sold at $1. I mean the government chipped in money in Citibank at ₹1. You have seen the JP Morgan bought Washington Mutual, and Bear Stearns was sold at $2. So that's the kind of historically it has happened. But here was a management insisting on the right kind of pricing. Now, what is the right price? When you have a massive hole, there's nothing to talk about the quality of asset, why would anybody come and give you the kind of price which you are looking for? So I think it's a mistake if I say it's a first.
I just want to get a quick word in from R.K. Bakshi, former Executive Director, Bank of Baroda. Mr. Bakshi, thank you for speaking with us. On a very fast-paced day. So a couple of things have happened. The board has been superseded. Prashant Kumar put in place. Do you think that this should really give confidence to depositors right now? First priority depositors who may be a worried lot are being assured that there's nothing to worry about.
I don't know whether that statement has been made, but yes, the quick action that has been taken. The bank has been facing capital constraints for quite some time, and their explorations for equity investors across the world have come to naught till now. They have appointed various merchant bankers, including latest, I think, Deutsche Bank, Kunj and all. But they have not worked out. So the government and RBI must be watching the situation, and particularly with their not redeeming their 81 bonds today, maybe it was possible that sends further jitters in the market. And to get an orderly solution in the interest of all stakeholders, particularly depositors, a status quo. That means moratorium is just a status quo. That's so that there is no preferential payment to certain people. There is no run on the bank. There is an orderly solution. And during the day, we had heard talks that LIC and SBI have been sounded. Whether they have been sounded or not, we don't know, or whether they have a proposition. But something definitely, because you just see, this is a bank where only 30-day moratorium has been declared. Board has been suspended, only superseded for 30 days. That means there is some. And RBI also said there a plan of reconstruction or this thing will be worked out. That means they already have some in an advanced stage of cooked up. So it's a very good thing to have done, because RBI till now has not allowed any scheduled commercial bank to fail in the sense of resulting losses to the depositors. And to work out an orderly solution, the best way is to put a hold on the things as it is. And you see, the State Bank ex-DMD has been appointed as the administrator in the meanwhile. So, in all likelihood, he will be a person who will be the right connect between Yes Bank and if SBI were to infuse equity into the bank. I think it's a very good thing.
Okay, so it hopefully will turn out to be a good thing for depositors as well. Ruchi Bhatia is still with me. Ruchi, reams of information which has come in from the RBI at this late hour. You've had a chance to go through most of it. What are the key points? I spotted some details on what Yes Bank can now spend on and can't spend on, and salaries, etc., is one of them. So, it's going to keep running.
Oh yeah, absolutely. They've given a list of things that the bank can spend on, which of course includes salaries. It includes your normal day-to-day expenditure as well. They've also given a diktat, so to say, that this 50,000 restriction will not apply for account holders in case of medical emergency, in case of education emergencies as well. But Tamanna, I must say this is an important step by the RBI, because they realized that that things in Yes Bank were becoming very bad, thick and fast, and which is why, in the absence of any credible investor coming in, it was imperative that the central bank and the government go ahead with a decision like that. This was being talked about for a very long time. In fact, in the morning also we picked up that SBI was holding a board meeting today. We were expecting the RBI to give out a clarification as well, and the RBI, if you see in their release as well, as our guests were also pointing out, it's a very well worded release by the RBI, wherein they have said that they've listed out 4 or 5 key things. That the first, of course, being that Yes Bank was not able to raise capital. They were not able to get an investor on board. Several people had come and had a discussion with RBI as well, but finally no money was put on the table. This was one of the reasons that the RBI has done the inevitable today. Secondly, they've said that there were governance issues in Yes Bank. We had seen how Yes Bank's NPA situation at one point of time was also very bad. The central bank was looking at it very carefully, and which is one of the reasons that has been cited in today's release as well. The RBI has also said that adequate opportunity was given to the current management to ensure that they are able to get a credible investor on board, but that ultimately did not materialize. They wanted a market-led revival, but because a market-led revival could not take place, because a credible investor was not coming, because they were not happy with the quality of people who were willing to park their money in Yes Bank. This is one of the reasons.
I'm going to stop you. I have Biswamohan Mahapatra. Yeah, Ruchi, just one sec. I have Biswamohan Mahapatra, former executive director of the RBI, on the phone line with me. Mr. Mahapatra, very good evening, and hopefully you can hear me. Just your first take on the RBI action. We've been having some conversation for the last 20 minutes or so on what has happened, and one of our speakers raised the question about why there was no action earlier. Was the situation allowed to deteriorate for too long, and hence we've had a situation where the RBI has had to place a moratorium on withdrawals?
Good evening. There is no one right answer to this question. This is ultimately a judgment. RBI gave the management time
all right, I'm afraid that's a poor line, Mr. Mahapatra. I'm going to try and connect you back where I can hear you more clearly. Just give me the opportunity to do that, but we can't hear you too well right now. That's a poor line. Let me go back to Mr. Bakshi with that question. As we look back, Mr. Bakshi, and you mentioned that this is a good thing that there is intervention. Mr. Prashant Kumar will now take charge. Was there no alternative to do this in a way where we didn't have to put in a moratorium?
No, the RBI has been watching apparently very the situation developing in Yes Bank very closely, and whether it is the annual financial inspection or other interactions with the management, I think they have been keeping a close watch on the developments. As was pointed out, a lot of investors were sounded. Yes Bank management was changed under Ravneet Gill. They appointed several celebrated merchant bankers to look for money for them. Certain investors may not have been acceptable, or certain investors, the discussions may be at preliminary stage only. There comes a time when the RBI cannot watch anymore, and if some events do trigger certain actions. having come to the situation that now they cannot watch any further for market-determined or market-led solution to the Yes Bank problem. Basically, the problem was they needed more equity because equity was getting thin. It was not covering properly their bad loans or the loans which were in double B or below categories. So RBI having watched that, first thing is a private bank. It's not a government bank. So RBI watched for the owner or the top management to source it from the market. Having seen it for sufficient time, now there comes a critical time when you have to decide this much and no further. So RBI wants now a government or regulator-led solution to it. And for that, the best thing is to place a moratorium so that there is no run, there is no panic, there is no disorderly withdrawal, there is no confusion in the market, and it's a small moratorium.
Mr. Mahapatra is back on the line. Mr. Mahapatra, just your take on the situation so far and whether this current picture where there is a moratorium and RBI has had to supersede the Yes Bank board could have been avoided.
It's difficult to say, with hindsight, but as I said in the beginning, it is a judgment. It's a judgment call that RBI has to take, and they have taken it. I should say they have taken in right time because they gave some time to the management to recoup capital, to get additional capital from outsiders. And probably that didn't materialize. And a point came in which they had to act, and they have acted.
Right. Let me go back to Ruchi with more details also on some of the points that have been coming through the RBI communications. And Ruchi, what also comes to mind is that this has been a long drawn process. The RBI in fact makes it clear in its many communications this evening that they have been going through the paces and tracking what is happening with Yes Bank all throughout, they have been trying to make sure that this was a market-led recovery, that an investor would have come in. The question can be asked, at what point really should the plug have been pulled? Should there have been a warning sign when numbers were not declared and the bank said that they were actually looking for investors in the interim? When really was it required that the alarm bells would have rung, and what can we hope for right now? In fact, I have with me Pratip Chaudhuri on the phone line, former chairman of the State Bank of India. Mr. Chaudhuri, a very good evening. Pleasure to speak with you. Unfortunately, on a day when the banking sector is seeming to face a challenge with a Yes Bank being placed under moratorium, we've reported earlier in the day that SBI and LIC will possibly come to the rescue. Your take on what we are seeing?
Oh, this question is to me?
Yes, Mr. Chaudhuri.
Oh, yeah. This is the standard operating procedure of RBI. RBI in public eulogizes private banks for their initiative, for their dynamism, for their business friendliness, and condemns the public sector bank for sloth, inefficiency, and not being customer friendly. But when it comes to the crunch, they tag on the private sector bank with the much criticized, much villainized public sector bank. They have done it time and again before. They are again doing it now.
Mr. Chaudhuri, from State Bank of India's point of view, and I'm just coming to that because that was an exclusive story we did earlier in the day, State Bank of India is in possibility being called upon to really rescue Yes Bank. How do you see it from the perspective of State Bank of India?
No, there is no choice. It's a national duty. So, these people have run the bank so irresponsibly, and RBI was looking the other way till recently, when they asked Rana Kapoor to take leave and go, and they were just a silent spectator, and now there is no choice. But otherwise, the Indian banking system will come into, a disrepute that if the depositors are not able to get their money. So it is just a measure to save the depositors.
Mr. Chaudhuri, in your view, could action have been taken earlier? Because we've been seeing Yes Bank sort of struggling with finding someone to infuse equity over the last many months. A lot of positive commentary going out there, but nothing really materializing. Do you think that the RBI or the government could have stepped in earlier?
No. The government, anybody has to step in with a checkbook. And government did not want to step in with a checkbook because that would, create what is called a moral hazard, a bad precedent.
Absolutely. The government has had to step in right now. Who's carrying the checkbook?
Government has not stepped in. Government has deputed SBI to step in.
Yes.
Government will not spend a penny of the taxpayers' money.
Well, when SBI steps in, steps in and it's government owned, earlier there was commentary,
Government owned, that's about it.
Yeah,
it's the milk cow for SBI, for the government. SBI has not got any capital infusion from government in last 5 years. It is only asked to contribute.
Yes. Thank you so much, Mr. Chaudhuri, for speaking with us. In fact, I want to thank all of our panelists who've come in on this big breaking news day when Yes Bank has been put under the watch by the Reserve Bank of India and the Government of India. There's a moratorium until April 3rd on RBI request. Withdrawals of only 50,000 rupees will be allowed, although there will be exceptions made for certain cases, for medical or for other emergencies that can be found valid. The board has been superseded. Mr. Prashant Kumar will be administrating the bank. So the government and the RBI has shown that they want to fix the situation. It's an unfolding story. We'll be following it right here on ET Now. We'll be taking a very short break and coming right back.